Today's COVID update is brought to you by Fulltech Systems, your technology center, where you'll come for the price but stay for the service.
And we're back, and we're getting into our first conversation for this morning. As we told you, we are going to be getting the details behind the National Gas Company. And here to have this conversation with us, we're joined by Gilbert Canton, who is the Managing Director of the National Gas Company. Good morning.
Good morning.
Good morning, Marlene. Good morning, Gavin. Thanks for having me.
All right. I feel like we're going back to some normal now. We have a physical person in front of us again.
Yeah, I'm having it.
But let's dive right into the conversation here. And where I really want to start before we get into what is the current situation is some of the backdrop and the establishment of the National Gas Company and its purpose.
Okay. Yeah. So the genesis of the company, basically, as you remember, I was at Belize Natural Energy as the CEO there. And when we discovered oil, we had associated gas that came along with the oil, and it was just being flared. So we figured that, from an environmental perspective and from a monetizing perspective, we should really do something with this. So we invested in a gas recovery plant, and we took that gas that was being flared and we extracted the butane and propane from it, LPG, and we started getting into the domestic market. At that time, B&E was doing about 5,000 barrels of oil a day. There was enough gas. It was about 20% of the market, and we made an impact in there. We were selling we were keeping prices at a as low as possible at that point in time. Oil declined in B&E as this normal trend for oil production, and the amount of gas that we were producing became less and less. So what we had to do, we had already established some franchises out in the country, and we needed to supply those and other customers. We decided that we had to go ahead and purchase some oil to keep purchase some LPG to keep the volumes up. Mm-hmm. And that's when we started buying from the importers at that point in time. And it was just not very stable situation. Prices were up and down all over the place from chemicals. They control whatever the prices that you buy from them. The BBS controlled the retail price, and of course we knew what the source price is based on this index that you use for purchasing of LPG. So we looked at that and he said, there's a lot of issues here. There's an issue of energy security. These trucks are crossing the border every day. What happens if the border is closed? Especially now in COVID-19, you can imagine what would happen with the border closed and trucks having to come in every day to supply the market. There's not enough storage in the country. I think there's maybe outside of what we have established now, there was about 300,000 gallons of storage. We put in 1.5 million gallons of storage to try to take that out to at least a month and a half of storage capability in the country. So there was that issue of energy security. There was the issue of quality control, because basically we were being told that we were supposed to sell at a 70-30 mix. But we knew that what was being imported was actually a 90-10. It was almost pure propane, because that's what is being sold mostly in the Central American regions, right? So there was the issue of quality, and of course the higher propane content you have in the mix, the higher the pressure, there's a safety issue associated with that also. So there was the issue of quality. And then there was also the issue of, as I mentioned earlier, pricing. So there's three legs that we were looking at: the security, the pricing, and the quality control. Mm-hmm. So we started looking and say, okay, suppose we were able to do this ourselves. And we started looking at how we could source it. And there was a time when we were bringing in some from Mexico and through Pemex and stuff. And then he said, but there is enough of a margin here. And this is such a national issue in the sense of energy supply, that 83% of the households in Belize use LPG butane for cooking. So there needs to be a more reliable, secure system in place here. Mm-hmm. So we said, well, and it should probably be more in terms of a quasi-government or government type of operation, because of the nature of the energy security and all that, and the amount of people that depend on it and stuff like that. So we looked at it. We looked at what the purchase price, the index of Mount Belvedere. We looked at what was being the retail price. And when we did the analysis, we said, but hey, there is an opportunity here that you could actually come in here, make a serious investment in this, be able to pay back that investment, and still maintain prices probably below what the retail prices or what that differential allowed you to do at that point in time, right? So that was the genesis of the project. So we started negotiating with the government and saying, hey, here's an opportunity. We think it should be a government public project. You all probably don't have the wherewithal to do it right now in terms of technical and financial resources. You could then use these resources from the private sector. The private sector can put in a technical resource, can put in a financial resource, do it under what has been a way of development process in other countries through a public-private partnership under what you call a build, own, operate, and transfer mechanism. So we started negotiating with government like that and saying, look, you all don't have to put in anything. You end up with this facility after a period of time. We come in, we design it, we build it, we operate it, we own it, we transfer it at the end of 15 years once the payback is received for the investment that comes in. And the way that works is that you do what you call a weighted average cost of capital to come up with a certain percent based on what the debt is and what your equity return is, and that's all the investors get out of it. There's not a profit motive in it more than just a return on your investment that you get. So after a period of time, that you transfer it to the government, it becomes a public facility.
So there are a lot of details there. I think that I wanna get into.
Right.
Let's start off first with who are the investors.
Okay, so the way we structured it, eventually it goes all to the government of Belize in 100%. The facilities though. At the beginning, what we said, we wanted the government to be involved in it. So we brought them in at 25%. They didn't have to put any cash contribution or anything, but of course they had to support the project. So they came in at 25% with it. Then my company, Innovative Energy Solutions, had 12% of it for the investment that we brought into it and for the conceptual project and all those other things. We got 12%. Then we went out and basically looked around. We put a project feasibility study together. We put up an investment package together, and we shopped around in different private sector investors in Belize, right? We picked up maybe 3 or 4 local investors. We have Bowen and Bowen, Giro and Sons, M&N, which is Mr. Usher, and Bedco, which is Abdallah Bedran. And then we also were saying this project is going to need some US dollars, so let's look for a bona fide investor that could bring us some US dollars, and that's when we came up with BWT Holdings, who has been a solid investor in Belize over the years. They've invested in a 10,000 acre farm called Valley of Peace Farms. They have a shrimp farm. They're also a very large investor in Santander. They've been helping Santander with some cash flow over the years. So they were a bona fide investor and they were interested in the project. They're not a strategic investor in that they're not involved in the operation of the company. They're just a financial investor in the company. So we put that package together.
What's their sharehold?
Their sharehold is 39%. Okay. So basically,
so they're the largest shareholder.
They're the largest shareholder. The largest shareholder is BWT Holdings, and then you have government of Belize, and then the other players in it, right? But altogether, they have 39%. But the Belizean component of it is large, is a majority shareholder.
It's the majority at almost 60%.
And the control is there, no? Yeah. That's the way it's structured. But we did that, and we minimized. We said this project needed to be geared in terms of equity and ratio about 70-30. So we had to raise the other part of the other 70% of the money had to come from debt. So what we did in that, we came up with a very innovative way of doing that, which is basically going out and trying to get project bonds. Now the bonds that we know in Belize, like the municipal bonds and stuff, are always guaranteed by government. These are project bonds that are actually guaranteed by the project itself. There's no further recourse than the project itself. So we were, and what we did, we wanted to bring in local financial institutions that had money in the banks that were not making any return on their money, and saying, look, we could put out these bonds, we could give you a 7% interest rate on it, a coupon rate on it, and then you could shift your money over into that. And thinking in terms of insurance companies, we're thinking in terms of credit unions, local banks, all these pension funds, all these places that people's money that were sitting there getting no return, and being able to then employ that in a way that the people that were behind those things were actually getting more money, which is normal people in Belize that invest in those things. No? So that was the idea. So about we raised about $30 million through that modality. We had one more gap that we wanted to fill, which was about another 12 million Belize dollars, and we wanted to get some US dollars for that. So we went to the IDB Invest. And that has been a long process. As you know, IDB Invest, they're very, very thorough. They do a lot of due diligence. They have legal due diligence, technical due diligence. They go through your project from, with a fine-tooth comb. So this project has been really, really vetted. That process took us probably over, I would say at least we started maybe October earlier than that last year, about 8 months of going through this process. They brought in technical advisors, which was a large engineering firm throughout the world, WSP, which has 40,000 employees and in a lot of countries. They came in and did all the technical evaluation, looked at the project, looked at the cost of the project to see if there was excess cost in the project. They went through these things very, very thoroughly. And then they brought in the legal advisors to look at all the agreements we have with the government, all those kinds to make sure that those stood scrutiny, right? And they finally, those are complete that they finally, about 3 weeks ago, completed the study, and we finally got the final approval. So now we're just doing the closeout of the financial documents, and we should get the first disbursement in probably, I'll be hoping about 2 weeks on that.
So, what I find interesting, and I think because this is the first opportunity we get to interview here on Open Your Eyes, is that there was a lot of groundwork done for this project. Yes. But in fact, the Belizean public only found out about it around the same time you went to IDB. And that seems to have been when most of the work had been completed so far. So
you have to address that. When we first started it, the way the process works is we had to go, the government has a process you go through for any project, right? And usually start with Beltrade. So you go to Beltrade and you start to go through the process with Beltrade. So we did that. And Beltrade, we had a couple of actually consultations done where the minister at the and Beltrade and ourselves where was Belize Technical College? I don't know what it is now. ITVET. We had several conferences there, our consultations. Where all the stakeholders of the butane industry came in and had a discussion about this project. So we did have that consultation at a point in time. After we got to the Beltrade loop and they did all the analysis, looked at the feasibility, so they studied all that, then we had to go to the Cabinet Subcommittee for Investment and go through that process of meeting their 5 points and everything, and that took a while to get through. And that's when we finally got to the point of doing a definitive agreement, So there was some, to get your point is there was consultation done through the process, but this process has been going on from 2015.
Yeah. Well, I mean, I think the major difference, and that really is the crux of the matter here, which is the sole importation license that has been gifted to the National Gas Company. And that leaves the public in a position where they must scrutinize what is taking place. Because any sole entity that is given an opportunity for as long as 15 years, we must monitor and we must hold you accountable.
Right.
So let's go back to some of the concessions in that agreement.
Right.
Because when a business deal like this is made, you're saying we're going to front the money, we're going to put this business together, you government, you don't have to do anything, you'll get some of the profits along the way.
Right.
We'll get a return on our investment and profit, because nobody just gives an investment without making some money from it.
The return is what we call a profit. It's basically an investment return. So it's not a profit though.
Yes.
Yeah. Okay.
So you are also in that process given some leeway, usually tax breaks. What are the concessions that are involved in this agreement?
Okay, so for the period of the construction, just like any development, big project that is done in Belize, you get concessions on tax breaks, you get concession on import duties, all that kind of stuff to the construction phase, and that's what we got. At the end of the construction phase, which is not really completed yet because of the COVID-19, we still have a lot of things like instrumentation, automation. We still have some work to do. When that is actually completed, then we move over into what you call the commercial operations, and then all those taxes fall, all those exemptions fall away, except that we do have an exemption for business tax going forward. And the idea
for how long? You don't pay business tax for how long?
For the life of the project.
For 15 years?
Yeah.
You'll pay no business tax?
But the concept of that basically is because all we get is a return, that any tax that is put on the project, if you think about it, then is added to the price bill up and goes to the consumer. So we don't get the benefit of having that business tax, but the consumer has to pay that. So it's easier. It's like the government taking on one hand and putting it into the other hand, basically. So that was the reasoning behind it. Yeah.
And how much would you say these concessions have saved you in the development of the project so far?
Oh, well, that's hard to quantify right now. But, I mean, basically, I think most of this stuff would have been brought in, I don't know, we had the Gst Exemption, which is 12.5%. So that was one that was I guess that is a major one. And there is each different item, mostly equipment that is brought in, and usually has about 5% duty or something. I'll have to sit back and calculate it. But the biggest one would be the Gst Exemption on the importation of that would be in the main exemption. Yeah.
And I wanted to ask a little bit more about the genesis of the project in the context of the previous situation we had where we had multiple importers, and I think you had described it as sort of, or let me say that there was some sort of irregularity with pricing and stuff. So I'd like to discuss that situation and then how the national gas company will create a more stable situation at the same time not keeping the prices low then for the consumers.
Yeah. So basically, the former importers had a complete control of the supply chain. So they would bring in their product into their terminals in the 3 different Central American countries and then truck it across from here. So whatever price they declare in importation to the Belize is actually an internal transfer price. It could be anything. It depends where you want to put your profit. You want to put it in Belize or you want to put it in the US. You fix that price. So there's no real control over that or transparency in that aspect of it. So all we had basically in Belize is a retail price that the Belize Bureau of Standards sets, right? But within that, they have complete control of what they sell to anybody for. So if I'm a wholesaler distributor, I would come to you and say, okay, I want to buy 10,000 gallons from you. And they might say, well, the price is $2. You go back tomorrow, they'll say the price is $3. You go back the next day, they'll say the price is $3.50. You know, there was no settled wholesale price. And that provides an issue in terms of competition, because if the Belizean distributor wants to compete against the same, these 3 importers were in the whole supply chain. So they were actually out there at the retail level. So they're competing, the Belizeans are competing for somebody who controls the wholesale price and their margins. So if they want to move in and take over a particular area, all they have to do is squeeze those margins on their competitor, and the competitor goes out and they take over that market share. And that is what there's been a complaint that was also out there among the local distributors. What we have done now is we have set one wholesale price across the whole country that is a normalized price. And anybody who buys from that national gas company gets that same price. To make it equal as to what was being done before, the parent companies for these 3 companies would deliver to their tanks, right, in their different locations. NGC is doing that. NGC delivers to their tanks, right, for the same price as they would have if they had to come to pick it up from us from the terminals or whatever. But we deliver to their tanks as long as they can receive 10,000 gallons or more. That is, the larger tanks. And then at the 2 depots and the terminal, we also have a threshold of 2,400 gallons per truck that the smaller distributors, the local distributors, will come and buy from. So they get it at the same price as what we deliver in those tanks for. So we've set a level playing field for competition in the distribution and retail sector of the market. No?
And again,
and I must say, in that regard, right now on the market share, what we're seeing right now is that about 40% of the sales right now are coming. We have is from Belizeans coming directly to us and buying from us, or we delivering to their particular tanks. It's up to about 40% now, and I think there'll probably be an increase in that as it washes out. Yeah.
So let's try to simplify the topic, because it is a complex issue.
It's very complex issue. Yeah.
And so, there are different prices that we're looking at that we need to be able to monitor. One, the actual cost, right? And that's the index that you keep referring to. There is the landing cost, how much it costs to get here.
Right.
There is the wholesale price that you then sell to the people who will have a fixed price that they will sell then to the consumer.
Right.
So we have the index price. What is your landing cost?
Okay, so what we do for the landing cost of it, what we did is we needed to try to get the best price, which is the freight and the handling cost to get it to a CIF value in Belize, right? We tendered for that. So in October and November of last year, we put out a tender for all the regional traders, including the 3 major importers right now, to say, look, we want to see what you could deliver to us at the port of Big Creek in Belize. The 3 companies decided they didn't want to participate in that for whatever reason. That's their decision. But we had about 5 other companies that actually bid on that, and we selected Carib LPG Trading as the successful bidder with the lowest cost to get that done, to deliver to us. So that fixes that, right? Then from there, basically, there is a throughput cost to the port, there is the operational maintenance cost, there's a general administration cost, and then there is a finance fee. And those pieces add up to then make the wholesale price. And of course, there is the transportation part of that, because we deliver it all over the country. That becomes a part of the price, because we wanted to normalize it across the whole country. So the landing
price?
The landing price would be You talk about the freight part of it?
Yeah.
The freight part
But
of it.
what does the LPG cost when it has been arrived at your facility?
It is a Mount Bellevue price plus a landing cost.
Which
and
is?
the landing cost right now is about 26 cents US. Is what is been charged to us to deliver it to Belize. And then we have the throughput fee and every bit. And all those pieces are actually set out in the legislation that is governing us. You could go in and you could find the exact numbers in there.
So the reason I ask these detailed questions is very simple. The purpose of the National Gas Company, in addition to quality and security and safety,
Right.
is primarily to ensure the lowest possible prices to Belizeans.
Right.
And in the explanations that have been made both by the Prime Minister himself, by the National Gas Company, one of the simplest ways that there was a cut in the cost was simply being able to bring LPG directly into the company. Before, you have Central American importers, it has to pass Belize, go through
Correct.
Panama Canal,
Correct.
land in the Pacific, be transported over land, which acquires a fuel cost as well,
Right.
and then being brought into the country.
Right.
That's a lot of extra time and money
Right.
being spent to bring it in. Now, when you are bringing directly into a port in Belize and moving from Big Creek to your facility,
Right.
there should be a dramatic cut in cost.
Right.
Let's cue to today.
Right. But
That is not evident in the prices.
Okay, because remember you're building a $60 million facility that has to be paid for in 15 years that the government owns at that point in time. So a lot of those extra costs are being replaced by the financing fee to get that project in place. There is a cost to putting something like that in place. You can't get a $60 million facility in place for not a cost. So there is a give and take on that.
So what you're saying is, and this is how business works. You invest, and there is a mechanism in place for you to be able to make back the money that you've spent in your business.
Right.
But you have been gifted, and I say gifted because now you are the sole importer. You control the fact that we all can get butane in our houses and cook now.
Let's put that in perspective, Marlene. What the reason that you have to have the full control over the supply is because if you look at your cost, the more that you can transport through it, it's a divisor, right? It's the bottom of the and then you divide the cost into that, and you get a lower per cents per gallon or something like that. So if you want to pay out this thing as quickly as possible and get complete control of it, if you're in the government shoes, you want to have that volume passing through the facility.
I agree. That's from your perspective. From the consumer perspective, competition can actually allow us to have better competitive prices. And when you have an investment, you want to ensure that there's less competition, because then if we only have to buy from you, you have a faster way of recovering your money and being able to get your profit. So the issue here is that we are living in exceptional times. And you, nor the Prime Minister, nor any person across the globe expected us to be facing COVID-19.
Right.
But we are where we are, in an extreme financial crunch. And that's not just at the government levels. We're talking about each individual household.
Yeah.
While you do have your projections in place as to how you will make back the money for your investment, your promise, your guarantee to the public was that you would offer lower prices. Why is there no consideration being made that at least for the next year, while we try to dig our way out from the effects of COVID-19, is there no leniency being made by this company that has sole control over LPG?
Well, I think if you put it into perspective, right? If you look at where the cost of in the United States right now, the Mount Bellevue price, and what the retail price is now, and you compare that to what it was before. A year ago, it was lower. It was at 45 cents. Now it's about 52 cents. A year ago, it was $5.18 to the consumer. Now it's $4.24. It is lower in comparing it on an apples basis, right? It is lower. The problem is when you use a word like cheaper, it becomes very. To me, it confuses everything because it's relative. We are price takers. We don't make a price. Right? Our price is really dependent on what it is that you bring it in for, right? And we have no control over that. So once that changes, if it goes up, the price goes up. If it goes down, the price goes down. We have no control over that.
So, but you have a rate of return that is expected.
Yes.
Which is?
It's well, if you look at what you do on a weight return, let's put it into perspective, right? You do a build up based on, there's a standard way, they call it a CAPM model, CAPM model that you do on it, right? In Belize, if you look at it, and they just did one for a RFP that's been put out by the PUC for some electric generation. Mm-hmm. They're saying in their model that it should be at 50 between 15 and 20% as a return, a good return on equity investment in a project, right? We are between 12 and 14, so we're below that. We brought our interest rates down to 7%, right? So average actual cost of the project, what you call a weighted average cost, is around about 9%. So it is a cheap financing project, as best you can do.
And well, let me, I guess, piggyback off of Marlene's question and ask then that because we're living in unprecedented times and because you are the sole importer, right, is there any room for, let me say, restructuring or something to deal with the times so that the consumers perhaps can feel it a bit less and have a lower price? Is there any room for that?
Well, if you look at the model that we have, right, basically, equity, as you probably know, takes a back end in terms of the waterfall of payments, right? So the investors don't get their money back to the latter half of the project. The first half of the project, the financing fee that goes into the build-up is really just a debt payment. Mm-hmm. You can't get around that. You have to pay back the banks, you have to pay back your bond investors, you have to give them that money. So that's, there's very little to be done by an equity investor at the very beginning of the project, mm-hmm, until maybe later down the road when it's your turn to get your money, then you could probably do something about that. But right now, there's not the financing fee that goes into the build-up is basically debt,
mm-hmm, Now, you will understand, I'm sure, how when the public hears because it's a very simple formula for people.
But
it's how much I'm gonna pay, right? It's how much I'm going to stretch out on my last dollar, right, to be able to cover what is an essential in over 80% of households.
Right.
How do you justify the fact that you came in under the premise that you would offer a better opportunity for Belizeans, and when that opportunity is needed the most, you are failing to do so?
I wouldn't say we're failing to do so. I just showed you. I just showed you the comparison between what it was before and what it is now in terms of.
Yes, but context is completely different here. One, that was when the Central Americans were importing. Now there is a monopoly. There's one person.
And the monopoly is producing a better price than when the Central Americans were in control of it. That's the point I'm making. If you do an apples to apples comparison, it is a cheaper or lower price at this point in time. It is. It's just that the price is reflected, the international price that is rising very steeply right now is reflected in it. There's nothing we could do to control that.
Well, then just to be clear then, so if we were, let's say, under the old system, that if we had the previous importers doing this now, so they would have had the same increase and possibly more?
Yes, of course. But that's what I'm saying. If you look at what they were getting back in that point in time, it was higher.
And their claim is that they would have then had the leverage to offer lower prices to Belizeans.
Yeah, because they publicly have come out with a release saying...
What is that? What is the intention, or what is driving that? Is it to go against NGC and what NGC is doing and try to make that look like it's not a workable situation? Is that really that? If you look right next door at what they are charging, they're the major players in all of Central America. Look at what they're charging in Guatemala. They're charging $103 a 100-pound cylinder in Guatemala. That is much higher than what we are charging right now. That works out, I think, to about $4.80 cents per gallon. We're at $4.24. Why is it cheaper in Guatemala? Why are they offering that? Why is it not cheaper in Guatemala than in Belize? If they're in control of that market, it doesn't make sense. So that is just, to me, some way of manipulating the situation to get some better PR, I guess,
But looking forward, I think it is critical for us to understand that if someone is able to benefit from a business opportunity that then impacts the Belizean consumers, we can't control who the importers are going to be. We leave those decisions to...
I know what you're getting at, Marlene. Let me just kind of stick a thing there.
Ask the question.
Go ahead.
So let me just... I think that it has to be clear that when this decision is made on our behalf, that it is in the best interest of Belizeans. And I mean the wider public, not just the Belizean investors that are involved in this process.
Well, I think it is, because if you look at it, as I just pointed out, it is a relatively lower price than what it was when the market was controlled by the 3 importers. It is. There's no doubt about that. Secondly, in 15 years, the government of Belize and the people of Belize get a $60 million investment project that is capable of storing 1.5 million gallons of product in Big Creek Port and the 2 terminals. That is a large benefit. You know, if we continue the way it was before, there'd be no investment in capacity, there'd be no security, no energy security, there'd be no quality control or ability to quality control. You could talk to the BBS; they have difficulty with quality control, right? And there'd be no transparent pricing. At least you have a transparent pricing that says, look, if the price in the United States goes up and our purchase price, it is reflected in the price. And here is by legislation, by law, here is what national gas companies are allowed to add to that. It's fixed.
Well, it's difficult to talk to the Belize Bureau of Standards.
That wasn't there before.
You know? Yes, and also there is a stream of income that is now going from National Gas Company based on your revenue to the Belize Bureau of Standards. So
yes.
there's not as much autonomy as one would hope if we're talking about this specific
You can look
issue.
at it from that perspective, but the other perspective, you look at it. The Belize Bureau of Standards is trapped in relation to trying to go out there and regulate and enforce what needs to happen.
I agree. Short-staffed and mostly in need in this time.
So the 2 cents per gallon that they're getting is to help them to be able to do that.
Agreed.
So it should have a benefit in terms of help to consumer protection for them to be out there checking all this stuff.
Even the most optimistic cynic will still see that if you receive money from a company, it makes you a bit.
But you're not receiving money from the company. You're receiving money from a price build-up that is controlled by the government. We're not giving the company, we're not giving them the money. They are actually getting it from a price build-up. That's part of it. Just like the government will get taxes, just like the government will get, that's the thing. We're not giving them money.
They receive money.
From the price build-up.
Yeah. And
right?
then they set the retail price.
You say that in any business out there that is getting taxes from the government of Belize, that the government is in bed with that business because they're getting taxes, don't make sense, right? It's the same thing. You could consider this regulatory fee like a tax. It doesn't make sense to say that because of that regulatory fee that BBS is in bed with NGC. That is completely around construction.
I am only saying the most optimistic cynic may think that. That's what I said.
Yeah.
But let me just go back to what we're saying. I think that what has clearly been identified, and I think that has been articulated by many different sectors,
right,
that there was a broken system. There was unpredictability,
right,
unreliability. And I think that is as we learn more information, we can be able to understand that better.
Right.
But it doesn't mean that the one solution that is placed in front of us is the best way or the only way or cannot be tweaked. That's my point.
Yeah.
And a national gas company is the only solution that we are allowed to have for the next 15 years based on this agreement.
Yeah.
So I think Gavin asked one of the most critical questions. Again, in the context of this pandemic, where everyone is refinancing, everyone is looking for some sort of consideration to be made for the financial struggles that we're facing. That is being asked of the National Gas Company, which is at the beginning. Nobody really wants to start off an arrangement like this under these times. Can you go back to your bondholders? Can you be able to negotiate something that you can be able to deliver on the promise on which this entire agreement was based on?
So you go back to the bondholders, and the bondholders are really taking care of people's money, the pension funds, the credit union and stuff. So you're going to ask them, you're asking the same people to give up to come back to the same thing. It washes out there. The benefit, I think, that you're seeing, if you go out there right now and you look at what is being charged. For example, I know that the smaller trucks that are picking from us are actually delivering to the smaller retailer at a lower price. And I am pretty sure that smaller retailer is actually passing on that benefit to some of their consumers. There is an opportunity within that margin from from the national gas company wholesale price to the retail price of competition now, which was not there before because it was completely controlled by 3 entities, right? And dictated. Now there is actual competition. I know that there are trucks the small trucks that are picking up what's going all the way to little Belize in Orange Walk, going all over the place to deliver because they are now offering a better price. We have a lot of calls coming for people saying, can you get to us? We want you to come to us because it's a better price. It's a better quality. Those are the things that happen. So the benefit, yes, there is the price is $4.24, but I could bet you there are people out there that are not paying that. You know, there are the in between, like the restaurants and them that can negotiate a price now, and they have.
But it's a fixed price.
Huh?
It's a fixed price.
No, it's not. It's a ceiling price. It's a ceiling price.
Okay.
Yeah. So you'll find out that if you go to a hotel or you go to a restaurant, that restaurant will say, okay, what price can you give me, Mr. Tumser or Mr. Bewell or Mr. Zeta? And then they'll call Mr. Ramirez or Mr. Rodriguez or whoever is picking up with the smaller trucks and say, what can you deliver to me for? And you'll find out now that a lot of these smaller places, Bronx Butane is actually buying from these smaller trucks because they get a better price. And I'm hoping they pass it on to the consumer. You know, that's the way it's working. It's been a revolution in that downstream part of it because now you have that level playing field for competition. And that's what's causing the problem with the 3 companies. They controlled that before. They moved from very little market share to almost over 90% market share. Now the Belizeans have a chance to try to get some of that back.
And I just wanted to ask very briefly about the question of quality, how you can ensure that the quality of the product that the consumers are getting is going to be consistent and, if not superior, to that they were getting before.
Yeah. So the regulated quality is 70-30, 70% propane and 30% butane. We have a blending scale that will provide that directly. We don't have that fully operational yet because of the issue I mentioned with COVID-19. The automation of and instrumentation part is delayed because we need to bring some people in to do the commissioning of those actual pieces of equipment. But we are making sure that we do provide a 70-30 mix, right? And there are ways of doing that. We do it through a hydrometer test and stuff like that. For example, and one of the points I wanted to make also is that we know in the petroleum industry that you sell products on a volume corrected to 60 degrees Fahrenheit. What happens is that if I am selling you LPG or butane and it's 90 degrees or 95 degrees, right? What happens is that volume, what you call your total absorbed volume, is a higher volume than what it would be at 60 degrees Fahrenheit. That's why sometimes you might buy at 100 gallons at 90 degrees and it drops at night and you go there, you might only have 98 gallons or 97 gallons. It's not because somebody thieved or it took out of your tank, but just the pressure, the density changes with temperature. So what we do is we correct our sales back to 60 degrees Fahrenheit. When we first started to do that to the Belizean distributors, they went, what's this? He said, because on their truck tank that they have the volume, they have their percentage. We to them multiply that, you get your observed volume. And let's say it comes out to 2,000 gallons. We bill them for 1,800 gallons. And we tell them that's what it is because that's what you were supposed to be charged. They weren't getting that before. They weren't getting that benefit before. Okay. You know. So
looking forward, and I appreciate you coming in and being able to give us all the information.
Right.
But looking forward, again, what is your guarantee to the Belizean public?
Our guarantee, as I said earlier, Marlene, I will never say that I will give you a cheaper product because cheaper is relative. I'm saying that we'll give you a transparent pricing and there's a transparent methodology to come up with that pricing right now. Price will be dictated by what the purchase price is in the state. It will go up and down based on that, right? But we will also guarantee that you will not run out of product because we now have a large storage capacity, and we also will guarantee that you will get your quality that you're supposed to get. So your safety won't be an issue, right?
And the market at this time, the price is set to most likely increase?
What we're doing right now is that, and again, this is part of the transparency. We will be probably bringing in a shipment every month to month and a half, right? So every time that ship comes in, we will have to sit down with the BBS. We'll have to show them the numbers and the figures of what we purchased it for, all the pieces, and then they will then check it out and approve a price at that point. So prices will be fluctuating probably every month. There'll be ups and downs. If it goes up, it goes up. If it goes down, based on the international price, it goes down. That's just like the fuel, just like petroleum is operated. It'll be that same way. And just one last comment that I think that I'd like to say is that we had done our projections based on about 11 to 12 million gallons of import of product a year, right? Of consumption. We thought that it was going to be less when we first started because of COVID-19. There's no restaurants open, there's no tourism, there's no hotels. What we found out is actually more. And that's the thing we're trying to figure out. We are on a trend for 14 million gallons a year. So what happened to those numbers? So those are the kinds of things that that need to be looked at, no? So we have been working with the COVID-19 restrictions of moving product at night and the curfew and all that. It's been a challenge, but we've met it. There's been no shortages, and we're moving along. And this second shipment came in earlier than we anticipated because of that high consumption pattern that we thought was there.
Well, thank you very much for coming in this morning.
No
we
problem.
do appreciate it.
All right, thank you very much.
All
Thank you,
right.
Gavin.
We're going to go ahead and take a break. When we come back, we'll be shifting our conversations to what's happening at the University of the West Indies, where they have a new head of the Open Campus. That's coming up after the break. Stay tuned.
This COVID update was brought to you by Fulltech Systems, your technology center, where you'll come for the price, but stay for the service.